Hi guys, for today's trade of the day, we'll be looking at the dollar franc. And as usual, we start off with the monthly. So for the monthly, we want to just focus on this area here. And what we want to do is to look out for our long-term support and our long-term resistance levels. This will be our key levels and it will help us find a direction to trade on the shorter term. Now, price has been drifting lower since 2001 and all the way and hit the low in 2011 before price rebounded and traded sideways. So graphically, what we can see is that there's actually a resistance right here where price came close to test it. If I were to extend it further back, price tested once, twice, third time, came fourth time recently in May 2019. So let's put this down as our long-term resistance. Now we also want to see whether this long-term resistance falls in line with any Fibonacci ratio level. So what we do is we take Fibonacci retracement and we take from the swing high, the super long-term swing high, and all the way to the swing low, and we open up all the ratios. We see that this level falls quite close to the 23.6. So let's just leave the 23.6 here. It's definitely a big zone. Let's take another retracement from this swing high to this swing low, and let's see whether it falls in line with any Fibonacci ratio. And it actually falls in line nicely with the 62% retracement. So let's just take this 62% retracement, which is a golden ratio. We can ignore this 23.6 because we know it's a zone. And what we're going to do is we want to find a long-term support. Since price spiked here once, spiked here a second time, we're not sure whether there's a real long-term support. But let's just use a Fibonacci extension from the same swing high here that we took earlier to the low here and to where price made a resistance here. And immediately we see that there are extensions here on this 23, there's extensions here on this 38, 50 and 61.8. so what is interesting is right now there's an immediate extension here, and I want to take the low here, the 61.8, as a long-term support. So I'll just open the 23 and the 61.8 and let me adjust it accordingly. So we have it. We have a long-term support level over here graphically. The price tested once, twice, and third time. Breaking this level, I can say safely the price will drop down to the lows in 2011. So let's call this the long-term support. And now that we found a long-term resistance and long-term support, let's go down to the weekly. Let me tidy this up. And recall this is the long-term 61.8 retracement, right, and also a graphical level. Okay, so now we see the price is actually closer to the long-term support than the long-term resistance. Like I earlier mentioned, what we expect to see is for price to actually come down to the long-term support and then bounce up towards the long-term resistance, because price has been in a sideways range for quite a long time. If we break below the long-term support, you'll see price free fall all the way down to at least this spike and even the longer term spike. Right? So, but for now, let's just try to find any further long-term support or long-term resistance. Now we know the price has been moving sideways since 2015, and what I actually see is I'll take an extension to draw a zigzag from the swing high here to this point and to this next swing high here. And we actually find that a long-term support falls in line with the 1.618, which makes this a very strong long-term support level. and I want to see whether we see the price rejected this area. I want to see whether this falls in line with any key Fibo ratio. So I'll take a retracement from a swing low here to the swing high here. And there's no real rejection here except for the 100%, which means that price went all the way up and came all the way back down to where it started. Right, so let's ignore this for now. And since we have no further support except for this strong area here, we keep this support and we try to look for some resistance on the weekly. Right now I see that we actually have a descending trend line resistance. Right, price touched once, touched a second time. Price could possibly bounce up here and then come back down, because we are actually longer term, we're actually in a sideways. But let's just try to find whether we have any retracement from swing high to where price made a low. And we see that there's actually a nice graphical retracement here at the 61.8. So let's highlight this key level and let me put in the weekly resistance. Now it's interesting to note also that the weekly resistance is in line with the descending trend line resistance. Okay, so price is still in the middle over here. Let's try to see whether when we go down to a lower time frame on the daily, whether we can find any other thing. And let me tidy this chart up. Okay, so what we see here is actually price. Recall that in the longer term picture, price is actually in a huge sideways movement. But on the weekly and even on the daily, we actually see price starts to drift lower below this descending trend line resistance. Right, so right now what we want to see is whether we are bearish or bullish. And like I mentioned earlier, on the monthly time frame, I'll actually wait for price to make a push down to the long-term support before playing a bounce up to the weekly resistance, or possibly even to the long-term resistance. Right, so right here we see graphically that there's actually a resistance in this area here, and I want to see whether it falls in line with any Fibonacci ratio. So I take a retracement from the swing high to the swing low, and I see that it's close to the 61.8. I can call this the daily resistance. Okay, so now that price is actually closer to a daily resistance, this will be the trade idea for today of what we can possibly do. We can wait for price to come back closer to a daily resistance before we play a shot down to the long-term support. And this weekly resistance will be our stop loss. So it's quite a nice risk reward, more than 2:1. Why I put the weekly resistance here as our stop loss is because if price breaks above the weekly resistance, if price were to go up and break above the weekly resistance, it will mean that price has also broken the long-term descending trend line and our bearish idea is invalidated, and we can possibly see price rise towards the long-term resistance. Otherwise, as long as we're below the weekly resistance, below this long-term descending trend line, we're overall generally bearish, and now we have a graphical overlap here on the daily resistance, and it's also the key Fibonacci 61.8 retracement. So we can say with greater certainty that in the short term, the short-term picture is bearish in line with the long-term picture. So we expect price to drop below the daily resistance towards our take profit at the long-term support. And we can also see that if we load up the indicators, right, price is actually holding very nicely. Find a nice moving average. Okay, price is actually holding very nicely below the 34 exponential moving average, and the 34 exponential moving average falls in line with our daily resistance here. This will be our trade of the day. Thank you.